Good afternoon, viewers. This is Padma Mishra. On behalf of India Association of LANR Texas, thank you for joining us this afternoon. For a year now, we have had unpredictable times and experiences affecting every aspect of our lives. We are here today to discuss one area that touches every adult. The topic is taxation and financial wellness. As you are aware, this year there was change on the tax filing date from April 15th to May 15th. Joining us today are experienced, results-driven, and successful professionals from the DFW Indian community. But before that, I have the pleasure to introduce a leader, philanthropist, serving the DFW community for over 10 years, the president of IANT, Mr. Shailesh Shah. Shailesh ji, welcome on the board.
Yeah, thank you so much for the nice introduction, Padmaji. Good afternoon, viewers. It is an honor to be with you as a president of India Association of North Texas, along with trustee, executive board, board of directors, and all the volunteers. As you know, the IANT is one of the oldest nonprofit organizations in USA. It's established in 1962. Our goal is to help the community, and we are here to serve the community. As you know, that as the pandemic continues this year, on behalf of India Association of North Texas, along with the trustee, executive board, and board of directors, we'd like to thank you for the front runners, doctors, nurses, emergency services, their related administrators, and beyond, including all the organizations who continues to lead in efforts taking care unconditionally in the moment of needs. So we like, on behalf of the India Association of North Texas, we'd like to thank you to them as well. And as you know, that Azadi Ka Amrit Mahotsav is celebrating, we are celebrating 75 years of India's independence. So it's going to be continuing from this year to the next year. So please stay tuned for a lot of activities that we're going to be doing in association with the Government of India and also the Consulate General of India in Houston office. So without further ado, I'd like to introduce today's webinar moderator, Justin Verghese. Justin is one of the board of directors in 2021 for the India Association of North Texas, and he's doing a fantastic job. Before I hand over to Justin, I'd like to say one thing. Today's webinar is going to be one of the best webinars going to have. It's going to teach us how to plan, how to invest, and how to file tax returns. So I have my pen and paper ready. So are you guys ready to rock and roll? And Justin, please take over from here, and I'm ready to start all my notes. Thank you, panelists as well. And Justin, take it over.
Thank you, sir. Thank you, sir. So I have my pen and paper ready, but I'm not going to take notes and talk on the same time. But yes, thank you, Shailesh Bhai. I want to take this wonderful opportunity to thank INT leadership and especially our dear President Shailesh Bhai, who gave me a chance to moderate this event. It's going to be a wonderful event. And as Shailesh ji just said, trust me, this is one of the best webinars we ever had in 2020, when it's going to be best. So if you are watching us online through YouTube, Facebook, website, wherever you are watching, or maybe you're watching us on recording, but if you have a pen and paper ready, you take notes, that's going to be great. It's going to be a great blessing for you. Today, I'm very excited, very, very excited, because we have three great men who are with us. They are very busy in their profession, and I want to thank them from the depth of my heart and from IANT that, hey, they find some time from their busy schedule, and they decided to spend with us, and that's a great thing. I mean, I really appreciate that thing. So without delaying, I just want to come to the point. I just want to introduce our panelists one by one. First, we have Mr. Rajesh Sanchala, who is a financial service professional, and he is with New York Life insurance company for last 21 years, almost 2 decades. Wow, that's awesome. He's working with the families, business owners, and different professionals, and he's guiding them in that field. The second one we have panelist we have is Dr. Bharat Sanghani. I don't know if Dr. Bharat Sanghani need any introduction or not. Most of the people know him, but if you are new in Dallas or if you're watching this program for the first time, just want to give you an intro that he is a hands-on chairman for Encore Enterprises. He is a commercial real estate investor. He is a doctor. He's a cardiologist. He is a motivational speaker. He is a life and business coach, and many other things which he will talk about himself in next 5 minutes. After that, we have Sunil Maini, who is the CEO of Sunil Maini CPA, and his firm is specialized in tax planning. They are specialized in accounting, consulting, bookkeeping, internal audit, and they are in business from 1990. They have close to 31 years of experience in budgeting, analyzing, analytical skills, customer service, data analysts, and business development. So we have 3 great people with us. And as I said, if you have a pen and paper, if you take notes, that's going to be great. It's going to be good for you. So without wasting any time, I will just let Brother Mr. Rajesh Bhai introduce himself, and then Dr. Bharat and Sunil Bhai then. Is it Rajesh Bhai?
Yeah, oh yeah, I'm here. So
Okay.
I need to go first.
Yes, sir. Yes, sir. Take this opportunity to introduce yourself.
My name is Rajesh Sanchala. I am with New York Life Insurance Company. As you mentioned, I have been in the business for 1 year. As far as ourselves is concerned, we at New York Life primarily help people to achieve their financial goals and dream. And we also work with the families, business owners, high net worth individual. As far as New York Life Company is concerned, most of the people know that we are the oldest and largest mutual life insurance company in America. And New York Life and India Association has long-term relationship, and we may be one of the oldest sponsor of INT. So thanks to INT also for this opportunity. And most of the time during my presentation, I will talk more about life insurance and other products, how it can help to get financially well-being over a period of time.
Justin, you're muted. You are on mute.
I'm sorry. My fault. Yeah, thank you, Mr. Rajesh. And it's Dr. Bharat. It's a time for you to introduce yourself.
Sure. Yeah, it's a great pleasure. My name is Bharat Sanghani. I'm a cardiologist by profession, and I still practice 1 day a month. So my cardiology skills are still going on. In the side, I started investment as a hobby and continue to grow. So today we have about 4,000 employees across the nation in our company. We are in about 16 states. We have about $1.5 billion of assets that we own and manage. Some of them are syndicated, but most of them are owned by us. And we also have a public company that we floated in Israel. So I'm going to talk about whatever I've been asked about investments, but I just want everybody to know that basically I'm a cardiologist. So whatever advice you want to take from me, you are at your own risk. I'll just share my experiences and you decide what you want to use and how you want to use it, but you're welcome.
Thank you, sir. Thank you. Sunil Bhai.
Thank you, Justin. I want to thank INT for this forum that they have created. And I am a long-time Dallas resident. I came here in 1981. I became active with INT in 1990, almost the same time I started my practice. And I have served in various positions within the India Association of North Texas, starting from being a treasurer for several years, then secretary for a couple of years, and then vice president, and later served as also president and chairman of the trustee board for a couple of years. I think a couple of times, not a couple of years, 1 year each. Thank God for the association I have had with IANT, and I started also being a sponsor of IANT then only, the very first couple of years that I joined them. And the motive of being in your own business is you can help more people than you will help if you are growing somebody else to do their work. And that aspect also we were able to achieve during the last so many years. And saving money is always on the top of everybody's mind. And more than saving money, I think making money should be the value we should have. And first of all, our personal needs, and then to be able to be charitable. You have to have an abundance to be able to be charitable. And if that is not our goal or idea, then that is our dharma. And I very much like that Justin put his name in Hindi also. And he said, I'm a Rashtravadi, and that's very nice. And thank you, Salesh Bhai, for all you are doing. And there are so many other people. Even Rajesh Sanchala was active in IANT, and Bharat Singhani as well as sponsored IANT events for a long time now. Dr. Bharat, it's good to be with you also. And let's continue.
Thank you, sir. Yes, as you said, it is. We need to know how to make money. We need to know how to save money. Also, we need to know how to invest money, and not only investing money, how can we help those people who don't have money, be charitable. I mean, that's a good feeling. Very good thought you said, sir. Thanks a lot. I'll start with Mr. Rajesh first. Before we get into discussion, Rajesh bhai, just want to know what is risk and wealth management, and why is it's so important today after this pandemic happened in 2020 and 2021 is going on. So why is it so important, the risk and wealth management?
Yeah, well, we need to do. We need to get financially well-being. What it means that when it comes to financial well-being means we are able to manage our monthly household expenses. At the same time, we should be able to meet some unexpected expenses and meeting emergencies. Also, we need to plan for our long-term financial goals, for which we need to adopt some of the principles and maintain the discipline. The first principle is we need to save first and then spend. We need to maintain at least 15 to 30% of our saving ratio, depending upon the age and where we are in life cycle. Because as we get older, the saving ratio will go up. Second is to build a wealth over a period of time. We need to invest in the appreciating assets like stock, bond, gold, real estate. We should not invest in depreciating assets. Third thing is, in order to achieve financial wellness and build wealth, we need to work with financial advisors to whom we trust and we rely upon it. So in order to achieve our financial wellness over a period of time, we need to start planning. And when it comes to the planning, the first thing comes in our mind is called defensive planning or risk management planning. What risk management planning is, it involves insurances. We need to insure our home, we need to insure our car, what we own. At the same time, we also need to insure our debt, like mortgages for the business loan. The most important thing is we need to insure ourselves, because all these things comes when we are here. So we need to protect ourselves as well as our family, for which life insurance is the best fit. Life insurance is also known as a risk transfer, and it's considered as a hedge against mortality risk, which means that dying too soon.
Thank you. You just said one word, financial wellness. Can you explain me what do you mean by financial wellness?
Financial wellness means we should be able to continue what we are doing without any obstacles down the road, because our life doesn't go straight up in the line. We all the time have some challenges and some issue. So our monthly budget as well as our reserve fund should be enough to meet those kind of contingencies. At the same time, we need to start building our wealth over a period of time to meet different objectives, maybe kids education funding, maybe our retirement planning, maybe building the wealth to be well-being over a period of time. That's what the financial wellness means.
Thank you. Thank you, Rajesh bhai. I have another next question I have for Dr. Bharat. And Dr. Bharat, I'm really expecting an honest answer from you on this question, because trust me, by profession, I'm in real estate. So my mom and dad, they tell me every day in the morning, if you would have studied well, you would have become a doctor. So you are my lifesaver. I said, see, he's a doctor and he came into real estate investment. So that's how I save myself. So my question to you this afternoon, Dr. Bharat, that I was going through your website and I saw that the term you have used from ordinary to an extraordinary. And that's a very catchy term. So basically, you had a very extraordinary journey from a cardiologist to a high successful commercial real estate investor and a business coach. What is the secret of it? What is the ingredients of it? And you have to be honest with that thing.
So, listen, if you're not honest, it doesn't work anyways.
Exactly.
So that's not even an issue. Everything I say always is based on my experiences, and I'll share my failures more than I'll share my successes. So that's not a big issue. But let me first address your parents' advice. I don't want anybody to get you a bill out of the jail or pass out of the jail for what you did. I'm sure, and I know you're educated too, but being a doctor, if you do not have capital, then it is truly, truly important that you be a doctor. Because as a physician, there is really no recession, right? You rarely will find a physician who does not have enough dollars that he can put on the table to feed the family and have a roof on the heads of the family. So medicine was very, very important. Just like most of us who have come to this country, I came with $10.45 in my pocket and a degree of MD. And that degree of MD, that created the basis for the real estate investments that I could do. Just to give you a simple example, in 1988, as a physician, I had a $1 million worth of extra money that I could invest. And that laid the foundation of the businesses that I got into it. So I still don't want anybody to think that if you don't have capital, it's an easy task. Now, we have seen a lot of success stories. Listen, they're all success stories in different areas and different wakes of life. But I'm just telling you, if you have capital, it's a lot easier to do business than not. So people who are still aspiring to find out what they should do, please don't write off being a physician. I got lots of issues the way the physicians are being treated right now, and the way the business of being a physician is going. But besides that, it is still one of the most noble and one of the most profitable business for the amount of dollars that you invest.
Right.
So that's my first comment to your first comment. As far as success, first of all, I don't consider myself truly successful yet. I still believe that I'm on the journey of success. So I really don't know the true answer to it. But whatever little success I've accomplished, I truly believe that investment per se or success per se is a very varied combination of art, research, experiences, and capital. So when you put all these four things together, then you truly have a material that you can count on. And over and above that is still luck factor.
Yes.
I will not discount the luck factor. I always have believed that many businesses that I went in and I said, oh, this is a home run. And I'm telling you, I worked very, very hard to keep those businesses afloat or to make them from break even. And some of the businesses I just said, well, seems easy, it's not too much risk, let's just go and do it. And my God, it just exploded in a huge financial windfall. So it is the right time at the right place. So to sum it up, it's truly and luck and hard work. I'm not even discussing those two things because those are given. Luck,
Yes.
Didn't somebody say that the harder I worked, luckier I got? So I think luck and this thing truly measures. And then you now start taking of the art, the experiences, the capital, and the research. When you put all of these things together, and then the final thing that keeps this perpetually working is truly, just like you said, honesty from your heart. Do you truly want to help people?
Yes.
Do you truly want to, if you take other people's money, and as you know, in our company, we do have a whole section for investors. And do you truly put yourself in the investor's shoes and say, I'm going to protect this money more than I'll protect my money? And that feeling, if it comes from the heart, investors feel it. When you deal with vendors, you worry about vendors. And a lot of times vendors would come and say, hey, but I'm spending that money, why are you worried? And I would say, listen, wait a second. It doesn't matter, it is your money or my money, but it's somebody's money which you are wasting. So if you have a true, clean heart and you mean well, that is probably one fundamental belief of mine that gives you a long-term success. Now you can be facetious and you can cheat and you can do all these things, but it will only get you a very short-term benefit. For long-term benefit, over and above everything I mentioned, I think a clean heart and desire to help somebody puts the ace in the game. So I'm going to stop at that point. These are just my experiences.
That is a very great, very genuine thing what you said, right? Like if you are genuine, if you are honest, definitely. And people who we are working with, they can definitely sense it, that how genuine you are. And you can trick some people for a short time, but not for a long time. But as long as you're honest and genuine and in the sight of divine power, everything is going to come to you as a blessing. I completely agree with you. You nailed it. I like it. Sunil bhai, how are you doing? You're muted, Sunil bhai.
Yes, I'm done.
Sunil bhai, you're in tax planning and accounting and consulting, bookkeeping. Oh my goodness, you're in this field for such a long time. 31 years. I have a question for you. Is there any new strategy you can recommend for the taxpayers this year?
The new strategy is the one that started from the time Adam ate the apple, So it's still the same old strategy of, if when you work for to make money, it's called earning money.
Yes.
When your money makes money, it's called making money.
Yes.
So that making money part we will get to later, but first we have to make a guy working in a garage become Bill Gates. And that's what you said you wanted to be. You were in real estate. And when we are talking to our clients, we tell them there is only everything we own is called our estate. Everything from our clothes, from our house to cars, jewelry, everything is called our estate. In your estate, there is only one thing which is called real, and that is called real estate. But that also will come to later because there's a focus of real estate from Dr. Bharat, who was speaking right before me. So I mentioned that the new things that are there for 2020 in this past year that you can make save from. Is that Can you say the question again?
Yeah, my question is that for people who are filing tax this year, 2021,
Okay.
so what are the new strategies we have to plan, which was not there before?
Yeah, so if because of the pandemic, if you were unemployed and you were getting unemployment compensation, the first $10,200 is not taxable. If you if you are making under 150K, above that it is not available. For individuals it's 75,000, and for head of household is $112,500 limit. But the first 10,200 is not. If you gave any money to charity, the first $300 of cash that you gave away, that is also going to deduct from your adjusted gross income. And then for the 2020 tax year, if you had withdrawn from your 401k or IRA plan up to a maximum of $100,000, there was going to be no tax on that. For if you could delay it for 3 years, and there was no penalty on that. The tax will be owed in 3 years. You can choose to pay 1/3 each year or all of it in the third year, whichever strategy you want to follow. And that is one. And also, the world needs to become more greener than it is. You know, the climate changes that will affect. And so if you are buying any vehicles, electric vehicles, or if you are investing into solar panels at your home and business, those solar credits, those are the new ways that you can. Now for businesses, those that were impacted by the COVID-19 and the sales went down a lot, then there was those economic injury disaster loans, the idle loans, and then there is some employee retention credit that is being also brought out, and the second draw of the first draw of the Paycheck Protection Program, there's a second draw that you can now avail through May 31st, and that is if your sales went between 50% and 80% below, and you were shut down by the government for some period of time. Those are the different strategies that are employable at the business level and the individual level I discussed before.
Great. Thank you. Thanks a lot. Sanjay. Next question is for Rajesh Bhai, and this is regarding insurance. So I just want to know that what is the reason that somebody should buy a life insurance, and how can I decide the face amount of life insurance?
Well, the primary reason why people buy life insurance, or one should buy life insurance, to protect him or herself and the family. Because when somebody dies in the family, especially breadwinner, there is some kind of adjustment for the survivor with the standard of living and other goals and objectives. Second reason to buy life insurance is to protect our human capital. Now let me explain what is human capital means. Let's say somebody is 40 years old and he is making $150,000. $100,000. Now considering 25 years working life, retiring at 65, if we take $100,000 times 25 years, he has $2.5 million in his working capital without any growth or without any expansion. So in the event that person dies prematurely, there's two things will happen. Family will lose a person. At the same time, family will lose his human capital. So in order to protect human capital, we need to have a life insurance. Third thing is we need to buy life insurance for the tax diversification purpose. And if you have life insurance which in your portfolio, it can help you to reduce the risk and it can provide tax diversification. There is some application for the business continuation also, in the event of partner buy, sell, for corporate redemption, for the succession. And there is some application for the life insurance for the estate planning need. These are the several reasons why somebody should buy life insurance. The way life insurance face amount can be determined, there are several ways. Either you can go by rule of thumb, which says you need to have at least 7 to 10 times of life insurance. So if you are making $100,000, you should have at least $1 million coverage. Or you can go by capital need analysis. What capital need analysis is, if your family needs $60,000 to live on comfortably, you need $1.5 million. And if that money is invested in conservative environment, earning 4% return, you are earning $60,000 and retaining your capital. And the last is, if you really want to find out exactly how much life insurance you need to have a foolproof plan, we need to do a need analysis, comprehensive need analysis. So it breaks into two parts: immediate cash need upon the breadwinner death or the person who is primarily bringing the money to the family. And then there's ongoing need, income need for the family, which consider kids' education and other stuff. So these are the ways to decide the life insurance face amount.
Thank you. You have explained that very well, very well. We have a question coming from YouTube from one of our audience who's watching us live right now, and they want me to ask this question to Sunilji and Bharatji both. So the question is this, I will read it for you, for both of you. The question is this: in this pandemic, what do you and how do you suggest to handle all the categories of financial upgrade or financial crisis? So this is for Bharatji as well as for Sunilji. So I will ask Bharatji to answer this question.
If I take the liberty, Justin, by just the previous question you asked to Sunil, by which he answered very nicely about what tax strategies people can adapt. At Angkor, we have done a tax strategy that I'm sure Sunil Bhai knows more about than I do, but I just want to run it by everybody because we put significant amount of money into it and saved taxes. It's the opportunity zone investment. They just in January, they extended it that till June 30. Any real estate gain that you have in 2020, in fact, it was all the way to 2019, and we put tens and tens of millions of dollars and saved taxes. Actually, whatever taxes we paid in 2019, we recouped all of those things by investing before March 31st, and we will not pay a single dollar in taxes for 2020. In 2020, we sold about $750 million worth of stuff. So you can imagine the amount of capital gain that is collected, but we are now switching it and putting it into opportunity zone, and we won't have to pay taxes for another 55 months, even if we don't invest anything. And if whatever we invest, 10 years, if we keep that invested for 10 years, there'll be no taxes and there'll be no recapture of depreciation. So this is one area. I know most of our Asian community is involved in real estate, and a lot of us have significant real estate gains. Then this is something that Sunil Bhai can talk more about it later. Coming back to this question that has been asked to us, that because of pandemic, how do you handle the financial crisis, or how do you handle your finances? Listen, it really, in my mind, it's very simple. It doesn't matter whether it is pandemic or non-pandemic. At any given time, like Rajesh Bhai started, and I've known Rajesh Bhai for a long time, at any time, in Gujarati, there is a saying, and I'm going to say it, and then I'll try to convert that into English if I can, that chadar karta pag lamba nahi karwana. What that means is you never spread your feet outside of the blanket size, or you will catch cold.
Yes.
Similarly, if you are making $100, whether it is pandemic or non-pandemic, you cannot spend more than that. And I think if you just follow that routine, and one of the mentorship program that we have, one of the things I always teach, try to share my experiences with people, and I always say this, that I'm not saying that don't stop spending money. All I'm saying is learn to live within your means and then work hard to extend your means for future. And that's the rule for financial independence, which will work from day one to day 100,000 of your survival. So again, I'll stop by repeating this statement because I truly believe in it very strongly, is that learn to live within your means and work hard to extend your means. And that's the way of keeping stress off of your financial worries.
Thank you, Dr. Bharat. And I will definitely come back to you because we have another question for you from one of our viewers on YouTube. But before that, I would go to Sunil Bhai and we will ask the same questions to Sunil Bhai. By the way, this question came to us from Mr. Chandra K. Bhandar, who is watching us on YouTube right now. Thank you, Mr. Chandra, for sending the question. And Sunil Bhai, I will leave it up to you.
Yeah, the opportunity zones that Dr. Bharat brought up are the areas that the government wants to develop and faster. And so they are wanting that people who are investing in those be able to benefit tax-wise. India has done that in a big way also. And the construction projects that have started even in 2010, where highways were being funded by the real estate gains that could be invested into like-kind exchanges that could be invested into the opportunity zones, would yield good results for the investor, and also the development of the country takes place. And it's a very fine way of investing, and that all real estate people do invest in that. Now, the question of Mr. Bhandar was, during this pandemic, we have had sales go down, revenues go down by a lot of, not because they were not keeping their feet within the blanket, but even the government had asked them to close because of the lockdown, and because of the spread being very rapid. So they were asked to close their businesses down, and the sales went down by 50 to 75 to 85%. And the first paycheck protection program, because the government did not want everybody to file for unemployment, they said we will fund the paycheck protection program by funding the employer, who will then keep the employee as an active employee and continue the business. Even so, there were other expenses like mortgage interest or utilities or rent that had to be paid, and there was not enough money for that. So the second draw of PPP came about as a result of that, and the one or two industries that were really hurt were the food industry and the accommodation, the hospitality industry, and for them the rate was 3.5 times their monthly payroll was the funding they were receiving. And for the other industries, all other industries, you could get up to 2.5% of your monthly payroll. And so that was a good help. Even so, the economic injury that was suffered by a lot of businesses, many businesses, that the government started the EIDL, the EIDL, the Economic Injury Disaster Loan, as a result, to make sure that during the period we were in a deep valley, that there was some way that the business could remain in business, and after the valley surpassed again, economy will return to normal, and it seems like that will happen also. People are wanting to get out of the house, and only right now they are not able to. And so the COVID-19 Economic Injury Disaster Loan was given, and you could take up to $500,000 at a rate of 3.75% interest. And if you're a nonprofit, and the need for and the importance of nonprofits is held at a very high value, because the funding that individual citizens do to charities, to churches, to temples, to nonprofits is as though a tax that is not blamed on the government as for collecting. So the charity is a tax that we owe, and the government gets to say that they didn't ask for it. And so therefore to maintain the continuity of nonprofits, so they are getting that loan at 2.75%. It's a 30-year loan. They can use it for working capital. They can use it for operating expenses, for whatever, to pass the phase that we currently are experiencing. It is not going to be continuous. And then the third program that for businesses, especially that Mr. Bhandar asked for, is the employee retention credit. So the employee retention credit, there were 2 periods that the government selected, March 30th, 2020 to December 31, and then they started it again in January 1, 2021 through June 30th, 2021. And they are saying that if your sales went down by 50 to 80% during those periods, for the 2 separate periods that I mentioned, if the sales went down, then you are again eligible for applying for an idle loan and even employee retention credit, for the employee retention. If you did not fire your employees or lay them off or send them home, then you will get a retention credit up to even $10,000 per employee as a benefit. And I think those were very good, needed, timely, misuse of money or overextending ourselves. The time was such that the business was closed by government orders and instructions, and so the businesses needed to be helped and were, and those who took the benefit were. So.
Thank you. That's a good piece of information. I just want to welcome everybody who is watching us online right now on YouTube, Facebook, and different medias. Just want to let you know this is Taxation and Financial Wellness free webinar conducted to you, bringing to you by India Association of North Texas, and we have 3 great men who are in this field for such a long time. And thank you. If you have any question, feel free to put that question, and we will be asking that to panelists. Right now, I have a question which is coming from Mr. Ghazal, and this is for Dr. Bharat. And the question what he's asking, Mr. Ghazal is asking, what opportunities does Dr. Bharat's company have for conservative investment?
First of all, conservative investment don't really go well with each other. If you truly want to have a good night's sleep and not have to worry about it, and if you believe in the United States, then Treasury bills your best option to have. And so anything after that is a risk-reward ratio. So I rather would call a low-risk, low-reward investment strategies. And just to take everybody back when I was a little kid and where my investment roots were planted, my dad took care of me all these years and teaching me and everything else. And then I came to US and he came to US to see how I was doing. And I was so excited. I was doing businesses. I would show him my spreadsheets. And I said, look, I'm investing here. 5 years later, I'm going to make this much money in this particular deal. And he would take those papers and throw it in the garbage. And he says, okay, I just answer one question, now one answer to me. And I said, what? He said, what is the risk of losing my principal? If you tell me the risk of losing my principal is more than 1%, then count me out of any investment you do. And trust me, I've kept that in my mind throughout this entire career. If you want to take risky investments, I call it an entertainment portfolio. So take certain amount of money and you might as well go to Las Vegas, gamble, or do a venture capital investment, or invest in whatever you want to invest, but it's entertainment value. Anything else that you have a risk of losing your principal, my dad said 1%, but I would just say very conservatively, that very remote chances of losing your principal, that's where it's called investment. And that's what we do. So in our company, every investment that we open up to our investors are all conservative and based on that risk-reward ratio. But if I have one message to everybody is do not fight time. A lot of us, we believe because somebody, our friend, our family, or somebody has made a lot of money and we say, oh my God, I'm 10 years older than him. I really need to work and invest so that I can make money faster. Let me tell you, investment is something that they have no responsibility to please you.
True, I agree.
Yes, we heard about Warren Buffett talking about Mr. Market, right? Mr. Market
Yes.
has no care.
Yes.
So try not to fit your desires to the timings. As long as you take the time out of your calculations, generally you will come out right. So again, summing it up, please do not try to catch up in investments. It does not work. Most of the times it will not work. And then the second thing is, anytime you have a significant chances of losing your principal, run away from it. I mean, Sunil Bhai said the same thing very, very clearly. Hey, guys, you earn your money and you make money when you invest. And what a great message that is. So
Yes.
we all work hard to earn our money. I know I used to work 22 or 24 hours just to make a penny as a physician. And that hard money, I would give it to somebody just to see it evaporate because I wanted to make that $1 million and $100 million in 3 years. Ladies and gentlemen, it does not work. If you don't take anything else, and the one message I give in the first thing, second message I'm telling you, do not try to catch up with your investment on time, and do not invest where you can lose your money. And I'm going to shut up at this time.
So if you want to become Dr. Bharat Singhani, then you have to start thinking like Dr. Bharat. Yes, I got it. Back to you, Rajesh Bhai. We have, our audience would like to know that sometimes they get confused with life insurance. So what are the types of, is there different types of life insurance? And if it is there, what are the different types of life insurance and which one they should pick and which one is more beneficial for them? Rajbhai.
Primarily, there's only two types of life insurance. One is term life insurance and second is permanent life insurance. The word term life insurance stands for temporary. So if you are looking for some temporary need, maybe when the kids are young or you have a mortgage to protect, in those kind of situations, term life insurance makes sense. But the term life insurance is for temporary. It may be for 10 years, 20 years, or 30 years. Term life insurance does only one thing. It gives you pure protection. When the dollars are limited and you have a life insurance need, it makes sense to start with term life insurance because it's better to have something rather than nothing. Other side of the life insurance type is permanent life insurance, or it is known as cash value life insurance. Again, in cash value life insurance, there is primarily one product which is known as whole life policies. In whole life policies, there are like other two variations, universal life and variable universal life. All the cash value life insurance does one thing. It gives you tactical growth. It builds your saving. It can help you to meet emergencies throughout your life. It can also help you during your retirement to supplement your retirement income or to give you strength to spend other assets first and leave life insurance for legacy purpose. Depending upon situation, you can decide how much you need, how much you can afford, and depending upon your goals and objectives and what you are trying to achieve, you can customize term life insurance and permanent life insurance. Honestly speaking, you can blend it, some term and some permanent, to meet your life insurance in total.
Okay, that's great. So I have a question about that, and this question will be for Rajesh Bhai as well as Sunil Bhai. So if somebody has insurance, even life insurance for a short term or a long term, is there any tax benefit they received on that thing? First Rajesh Bhai, and then I will ask Sunil Bhai.
Life insurance normally doesn't give any tax deductions because you are paying premium after tax. But life insurance, cash value life insurance or permanent life insurance gives you some tax benefit. The cash value build up inside the policy is tax deferred. It means you are not paying the tax on the earning in the form of interest, dividend, or some kind of mutual fund based return.
What is it called?
Second thing, it gives you tax-free access throughout your life because you can use the cash value via loan, which is not reportable. And finally, when family inherits the money, it is tax-free, income tax-free. These are the tax benefit of life insurance. And one last thing, if you buy life insurance under traditional defined benefit plan, you can have a premium deduction and still up to 70 to 80% of pure life insurance death benefit is purely tax-free. The life insurance does three things. It gives you tax deferred growth. It allows you to use cash value during your lifetime tax-free, and it transfers death benefit to family on tax-free basis.
I will let Sunil Bhai take it from here and can give more deep information about it if you have regarding from a CPA perspective. I cannot hear you, Sunil Bhai. I think you have to unmute your mic.
Sure.
Yes.
One thing I want to add to what Rajesh Sanchala said is that some of the money that we buy life insurance with, that the life insurance proceeds should help our non-profit organizations. Some part of it, for every one of us that are, done well in life, we should leave at least 10 to 20% of our monies towards our religious organizations or cultural organizations such as IANTA. So I would encourage that from every single person alive, that please make sure that your children and their children get to see the aspects of our culture in this foreign country, and if that means that each of us contribute towards that through the life insurance proceeds, that would be a very high goal to first form, then realize, such that our deaths should benefit the organizations that we were involved with. And the one life insurance is always, because we want it to be non-taxable when the face value is realized. Therefore, it has to be paid with after-tax money. So now the government came up with a project where you could pay the premiums from your C corporation. It is not a deductible expense, but it is it goes on the balance sheet. And then later, when the face value is realized, first the insurance proceeds will pay the loan that was given by the corporation, and then the spouse, the second to die, will get the money, the remainder of the money. And that C corporation money also will finally go to that second to die only also. So in fact, the entire amount goes, but throughout the term of throughout the term when the insurance premiums were being paid, it was a C corporation putting the money out, not the out-of-pocket expense for the taxpayers. So that was one benefit, tax use of the money to buy insurance. So and life insurance, if it's not in our plan, then we are not serving our children and our future generations good. So it's very important. So.
Thank you. Thanks, Bhai. Dr. Bharat, our audience want to know one thing, which I wanted to ask you, that while this conversation, our conversation is centered around the economic strain during this pandemic, which is happening. So Dallas is seeing a trend of in the real estate industry. It is kind of booming. So in a layman language, we say it's booming. Dallas is booming. Austin is booming. Can you just explain what does that mean in real estate investment on the real estate? How is it booming?
So if you really look at real estate per se, across the nation, most of the places, the single family homes are in a huge demand. And it is almost impossible in Dallas, or for that matter, significant number of cities in Texas, to have a house available to buy. Most houses, as soon as they're put on the market, they're gone in about 4 to 24 hours. And some of them are even getting prime more than the asking price. So that's essentially what is called booming of the market in the single family, we call it SFR segment, single family rentals. This is not actually for rental, this is actually for buying. And the reason is very simple, because A, the interest rates are the lowest of all the time. B, people have stimulus money, so they have money that's coming in. C, there is an exodus from the gateway cities like New York and California, because everybody knows that those city taxes are going to go up. New York is proposing 16% city tax. Just imagine, over and above what you pay for the state and for the federal, you have to pay 16% of your income as taxes. It's crazy. California, LA is talking about 15%. So that exodus is coming to, the companies are coming into Dallas. Companies are coming into Austin. And Elon Musk has definitely helped. When Elon Musk started that strategy, everybody said, okay, let's go run. John Paulson was from California. He started moving into the Puerto Rico area where there is no taxation. So all these things combined together has really created a boom. And people are just swamping over getting these assets. As far as going to commercial real estate, there is a huge demand for multifamily. And this is probably the only time that I can think in history, and is that single family and multifamily are equally in demand at the same time. Generally, single family is down, people can't afford the houses, so they run up and rent those multifamily apartments. And generally, when people have a lot of money, they start buying homes, and then they don't go in and rent. This is probably one time where both are just going. What is the reason for that? The reason is very simple. Is again, there are lots of people making a lot of money. They are now do not need to stay with their parents. They can say, okay, I can afford it now. I can go do someplace else. The prices have gone up because the demand has gone up to a certain extent, but the bigger reason it has gone up is because, and then other gurus of taxations are here, so I'm not going to venture a lot more into it, but what has happened is because there is so much rampant amount of money available in the capital market that there is not really good investments are out there. So suddenly multifamily is considered a bond investment. Guys, it is not a bond investment. Institutions are thinking, oh, this is a foolproof investment. Just think about it. We just sold day before yesterday an apartment complex in Phoenix, Arizona at a 3.65 cap. And people who understand real estate, that means whatever money you invested is going to make 3.65% return per year.
Wow, 3.6, wow.
Yeah, it's unbelievable. Yeah. But think about it, 3.65% return, and then the debt on it is at 4%. So if you have a debt that is at 4% and the whole project is going to make 3.65% return, I don't know how this math works. I don't know.
3.6 is a cap rate you're talking about.
Yeah, exactly. But that's what the return is, right?
Yes.
Yeah. 3.6 cap rate means if you bought that asset for $100 million, your return is 3.65%.
Yes.
So cap is 3.65. Essentially, that's what it means. That's the return, unlevered return. So unlevered return of 3.65 and a debt of 4%. This is what driving the prices. This is non-sustainable. But that's what everybody is talking about, Justin, by when they said there is a mad rush and the economy is booming. As far as the offices and retail, that is probably not seeing as much boom. In fact, office is probably in a slump. But Dallas, again, people are moving in. People are moving in. The prime real estate, the prime office space is still doing well. I just saw there were 2 projects that were just announced of office building construction in Dallas when the rest of the country is going bankrupt in having office complexes. So these are the benefits of living in a city like this, where it is truly people are swarming over, and all this I mean, salute to those people. Who am I to tell New York governor or the governor of LA or California what to do? But keep increasing the taxes is just not going to work on a long-term basis. So that's in my mind, that's what the booming of real estate is today.
Even Justin, Texas as an economy is the 13th largest country on earth. And if you take DFW itself only as an economy, it's the 19th largest country on earth. It's after Switzerland or Sweden, I think. And so we are living for the last 40 years since I've been here, since 1981. We have only seen an uptick. We have, I think, since I am also the chairman emeritus of the India Chamber of Commerce, US India Chamber, I can tell you that we have 19 world headquarters of companies in the DFW area and over, I think, 36 in the state of Texas of Fortune 100 companies and Fortune 500 companies together. And so Texas, even with Tesla coming, and our governor has a very fine way of attracting businesses, and so as an economy, Texas will be fine, but will it appreciate? It will not relative to what happens in California or New York or Florida, but it will remain consistent and appreciate every, I think 15 years your house value will double is what was the rate earlier, but now it's, I think every 10 years or 10 and a half years the property value doubles in this state also. And so we are very fortunate to be experiencing in heaven. So heaven of heaven. So,
but I think this is just my opinion, and I think the audience, for somebody in the audience was also saying that when all this boom is happening, our local people who are in Dallas, they are struggling. So because people from out of state, they're coming with that extra money and they're ready to put more than asking price. Our local guys who are working here for a long time, they are struggling, I think. I don't know, Dr. Bharat, you want to say anything about that?
I mean, no, that's 100% correct, but that again goes back to the investment principle, right? So yes. If you had invested in your home, if you had invested someplace in Dallas community someplace, then they would have appreciated and you could have sold your home and made profit and do whatever you want to do with it. So, but if you are just going to watch from the other end of the bank, then what you can do is you can see the river go up and river go down. You'll right. never be part of it. So when river goes down, you say, I was right. It was a terrible thing to invest. And the river goes up, you say, I missed it. So I don't know that there is any real...
A lot of people, here, even in the panel, knew my dad. And he used to say that in real estate, the rule is you will pay the highest price up till today. From here on, it will be the lowest price ever.
Right.
So if you realize that real estate is that forum where what you are paying is the lowest price from here onwards, and there'll be instances where it is utterly wrong, and those are the conservative investments that don't bring any profit and actually create loss. My own very dear nephew. He bought 3-4 apartment condominiums and lost his shirt on that, and so he really hit me when I told him this that it's the lowest price ever, and now onwards it will be only increasing in price. He did not agree with me at all. So I am telling you my failures, as Dr. Singhani was saying, that I should also. So.
Thank you, guys. We'll take a small break. This is a time where we just want to acknowledge all the sponsors who are standing with us with INT and as a backbone, and who are with us all these years. And without sponsors, I'm telling you, my dear friends, without sponsors, we couldn't be here where we are right now. So we just want to acknowledge them, and we want to take a small 30 seconds break, 30 to 45 seconds, maximum 1 minute. Don't go anywhere. We'll be back. Okay, so we will continue. There's a question for Rajesh Bhai. How are you doing, Rajesh Bhai, by the way?
So far, so good.
Fantastic, fantastic. Hey, so there's a question. How to secure our debts through insurance? Our audience want to know about that.
Good question. In order to secure our debt, you need to buy life insurance equal to the face amount of your debt. So let's say you have a bank loan of $2 million. And if you feel that in case something happened to me, loan should get paid up, you need to buy a $2 million policy. Most of the time when you are trying to secure it, because debt is for a certain period of time, maybe 10 years, 15 years, 20 years, depending upon the length of the loan or length of the note. So you will be okay to buy term life insurance equal to the debt amount to protect or to give hedge against risk of dying soon and debt remain unpaid and you are passing the debt to the family member or survivor. So that is the one and easiest way to protect the debt with the life insurance.
Thank you. Thank you. That's a great input on that thing. I just want to take this opportunity to bring on our one of our trustees, our very dear trustees, I would say, Kamal Kaushal Bhai. He is with INT for such a long time. He's one of the INT, is what I will say. Definitely, he's with us from a decade, and he's a pioneer of this organization. And he's being a great mentor and motivation for many people, including us, for the new people who have just joined. And also, he was the president of INT 2016. So I will let Kamal Bhai come and take this time, and he will be speaking to us. Kamal Bhai.
Thank you, Justin. My God, that introduction was like I was looking around like, who are you speaking about, right? So thank you for doing that. I just wanted to take a couple of minutes, first of all, to thank all the viewers who are not only watching right now, but thousands and thousands more will watch on the social media as you guys relate down the road. The second thing, I wanted to thank the panelists. Dr. Bharat Sangani, obviously our own Sunil Mani. I remember the day when I came to North Texas, Dallas, in '99. And of course, my dear Rajesh, I had the opportunity, Rajesh Sanchala, to work with for the last almost 21 years, going to 22, right? So thank you very much for your valuable time you guys have given to shed light on so many different topics. So I will not comment on any of that. I'm going to keep myself above the fray of my professional life, right? So also I want to thank the volunteers, not only the India Association of North Texas volunteers, my gosh, thousands of them, right, from Anand Vayar to India Day to all the community stuff we do, but to the board and executive board, the trustees, past president, everyone, we are all in our heart love our ancestry, or some of us who were born there. And thank you for your, and all the community organizations, by the way. We have close to 100 community organizations, part of India Association right now, because our goals are aligned. At the end of the day, we all serve the same cause. And the more together we are, the better we are, right? And in addition to that, I just wanted to say about the India Association, right? It's a very few organizations are like this. It's a non-political, non-religious, non-sectarian, been around since 1962. Probably the oldest organization in this country, maybe the second, right? really promoting the culture, really promoting the values, the social aspect, connecting us with our American fellows. Your heart kind of smiles when you look at in some of the venues, the senators, the congressmen, or even if with our sister organizations, the governor or the ambassador to UN or whatever, the facets are. Just really getting to know the mayor, the county judges, and so forth. So it's just an amazing program to have, and also to uplift our children at the India Day. I know that Sunilji and Shaleshka spoke about that. This year we were not able to do that because of COVID situation, the India Day. But last year, I think over 1,250 teams, the participants, right? Over 125 teams. And you can count their siblings, the parents, the grandparents, relatives, who kind of watch and all of that, to give them a platform not only to express themselves, but also to kind of perform and so forth. So I can go on and on, but really what Sunilji said and just said, Justin, that and all three of these, Dr. Singhani, Sunilji, and obviously New York Life for decades, really been givers, nothing in a return for and we appreciate that for them to give their priceless time, a commodity called time, to just to help out the community also to express their ideas, views, and opening up themselves for any questions and answers or down the road type of conversation. And so my appeal will be to all the community members, when I say members, loosely termed, the business owners or the professionals, to give. They're giving, so thankful to all the other organizations, but don't shy away from the India Association, because this is probably the only organization which has nothing to do with religion, nothing to do with political party, nothing to do, it's a non-sectarian. So it's really to promote the culture and, advocate for us. And lastly, I will say that our thoughts and prayers, because of the COVID-19 situation, we all have, one way or the other, kind of felt our sides are empty. A relative or a friend or someone we knew, someone we known about, have suffered, with their life situations and economically, right? So we just pray to that Almighty God that things will, smooth on from there on, and so prayers for that. In addition to that, just again, huge appreciation to the volunteers of the India Association of North Texas, and a hearty appreciation to these panelists who are here. So thank you very much.
Thank you, Kamalji. And also just want to thank you all of the people who are watching us online right now through Facebook, YouTube, and different medias. If you're having a heart of serving community, join us. We will do it together. As a team, we are together. And I welcome you all to be a part of INT. Let us do it together. And we have great leaders here. As Kamalji said, there are great mentors here, great sponsors here, and we can get this done. I have a question for you, Sunilji. Back to you, Sunilji. Sure. The question is that after this 2020 is passed and under the administration of our new president in 2021, are there any tax changes will be announced, or is already this change, or is it going to be announced?
So every government that will enter will try to leave their own mark on the legacy that will follow them. Everybody wants to leave a mark on where they have been. And so what this administration wants to do is to increase the tax rate of, instead of calling a tax increase on taxpayers, they will go the indirect route of increasing the tax rate of the corporations. And so right now, in 2017, our former president reduced the rate drastically, and they want to take it back to 25 to 28%. And it won't happen basically, but still 25% seems to become okay with even some of the Republicans. And for those companies that are making sales in excess of the book income is in excess of $100 million, there will be another 21% tax on the global intangible lower tax income that they have, which is intellectual property, and they sell it from Ireland instead of selling it from US, but it was made in the US. And till now, the rate on that was 10.5%. Now they'll make it 21%. And so that will be doubling of that rate, and which is good, which is needed for us to, they will also discontinue the fossil fuels. This is only for infrastructure development that they're talking about. And another one will be that they will charge a risk fee to all the corporations that make sales of more than $50 billion. There'll be a risk fee. This will be used for purposes of federal housing policy that they want to change. Some segment of the society, whether it is their fate or lack of hard work, or whether they are become widows early or orphans or handicapped. Some of these people really need to be helped, for various reasons that life throws on their face. And so such are also to whom much is given, they say much is required of. And so it is required of us to even fund the needs of those such people. And so the federal housing policy is for one reason for that is helping those kind of people who are left behind by whatever reason. And there'll be a risk fee that will be charged to the companies that are making a lot of income. And then there will be a marginal tax rate for people who are earning more than 400,000. One good thing about this administration is they have promised they will not raise the taxes on families or individuals who are making 400,000 or less. All the changes will be to families and couples and individuals who are making above $400,000. And there'll be a marginal tax rate. Right now it is 37%. They're talking about increasing it to 39.6% if your income is more than 625,000. And then there are people who are making more than $1 million. The capital gains tax rate for them will increase. That is what the Biden administration is suggesting. Their suggestions don't matter because if Republicans don't want to agree to it, they will not. And there are even Democrats who don't agree with that part because those people who have done well they should not be penalized for doing well. And it's a very correct flow of thought that if I am doing well, you are making me feel like I've done a bad thing. And so that is what increasing tax for that group of people is. And then they are talking about, I already said that the 39.6% for people making more than $625,000. And then, so when a person dies, then the estate, everything we own is called our estate. So right. Whether we own car or life insurance or real estate or jewelry, whatever we own is called our estate. So when, let us say my grandfather bought a piece of land 300 years ago, great-grandfather, whatever number of grandfathers, my ancestors bought that land, and they bought it for $1 for 100 acres. Yeah. So my basis in that land is only $1. So the government is trying to say that there will be no step up of basis because that day's $1, 300 years ago is $1 is now equal to $10 million today. but they are saying there will be no step-up in basis. Therefore, if I sell that land for $10 million, I will have to pay tax on 10 million minus $1. And so they are trying to get away with the step-up in basis. So those are the things that the Biden administration is trying to do, which is both good and nasty, because at the end of the day, we have to do the education reform. This last thing for the step-up in basis is to do the education reform, which means every school should be Wi-Fi ready. And after the pandemic, we understand the need for every child. A lot of the better earning parents are able to afford computers for their children, but the poor kids are not able to, and so they have not had any schooling for the last 1 year.
Right.
And that means our future looks bad. If our children are not educated, that means chodo kal ki baat purani, it will become new again because our children are not educated. So all these are things that the new government is trying to put into force, but we have to all work in unison. But it's very hard when my money is being taken away from me.
I have a very quick question to you, Sunil. A very quick question. So the stimulus check which we have received in 2020, do we have to pay tax for that thing, or is it tax exempt?
They are tax exempt. They have to be said that they are income, but they are not taxable income. Whether it is in so the first $1,200 that people got if they singles was 75,000 or less. Married couple was 150, and head of household was 112,500. So the first, if you are under in those income ranges, then the money that you received is not taxable income. Whether the first one was not, the second one is not, and the third one also is not going to be taxable. The third one that was received in the $1,400, that $1.93 trillion budget that President Biden was able to.
Are we going to get more stimulus check this year? Any idea?
I pray and hope. I hope and pray that the pandemic doesn't continue, and therefore there is no need for any more stimulus checks. But if the pandemic, like the surge in India, has the second wave has come and taken everybody by surprise, and if that happens, then the need for the government, which knows in US is the largest economy on earth. That means even after all the deficits we have, our deficits are only 8 or 9% of our assets. So it's not like we are lacking in money and therefore should not be able to share. But the real interest is that we ourselves should have been in the position that Dr. Sangani talks about all the time.
Right.
We should have always had our feet within our blanket, and we should have been prepared for the pandemic, and we should not have had to receive any stimulus payment. But that is the best world scenario. In the regular world, it happens such that the 75% of this country makes less than $150,000.
Right.
Actually, even 85% make less than $150,000.
Right.
Actually, even 88% make less than $150,000. So, if you think 88% make less than 150, the lowest 35-40%, they really need help. So, if that help is needed, I hope everybody will come together and give them the money. The rest of them, maybe we will not need, but they should get the help.
Thank you.
They are really troubled right now.
Yeah, thank you. There's a question from audience for Rajesh Bhai, and the question is that what is the difference between will and state planning?
Okay, good question. Well, everybody needs an estate planning, because if you don't have an estate plan, state of Texas has done your estate plan. The difference between will and estate plan is will is the basic documents, and that's where the estate plan begins. So if a person dies without will, it's considered law of intestacy. So state of Texas will decide who gets what. However, in that situation, surviving spouse and kids has the first right to get some asset. Now, will concept. What is will? Will is a desire. Upon your death, who should get what? That's what the will is. So, when you are thinking about estate plan, first thing is either you need to have a will or you need to have a living trust. And with will, you need to have some ancillary documents like durable power of attorney. What durable power of attorney is, as you get older or your health get deteriorated, you may not be able to manage your finance and daily affairs. So you are giving somebody power of attorney to manage your financial affairs and day-to-day activity. Second is you need to have a medical power of attorney. What it says that in case you are unable to make a decision for your health about your treatment, you are giving somebody power of attorney to make decision for you. The last one is called living will. So it says that how you want to end your life. In case there is a situation you confined to coma and there is no hope that doctor says person will come back. In that situation, instead of living on mercy and family member make decision, you are telling that in that situation, if there is no hope, let unplug me and let me go. So when it comes to estate planning, you need a will, which we call last and testament will. It shows your desire, who will get what, and you can include some trust provision to create some kind of trust for the tax efficiency and to avoid some kind of, to reduce your estate tax. And with that, you have durable power of attorney, medical power of attorney or medical directives, and living will. These are the documents which you need estate plan for your estate planning.
Thank you. That's a very well explained, and of course, the person who asked the question may have got the answer. We have another question coming online from Vicky, and this question is for Dr. Bharat. The question is that what are the investment opportunities for H-1B visa holders working in United States?
H-1B visa holders to invest is more of an immigration question, but they can invest, they just cannot. And then there are certain rules and regulations that apply to it, and we have to create those documents which immigration attorneys will do it, but they obviously cannot go outside of the realm for the work purposes for what the H-1B was issued. But as far as the investment goes, they are still considered whichever country they came from, and it's a foreign investment. And foreign investment, all the regulations and acts apply to it. We have not many, but we have some people who invested in our company or projects from outside this country, and at the end of the year, we have to withhold some taxes and we distribute the rest of the money, and then they file the returns, and depending upon the situation, they get their taxes either back or they have to pay the taxes. So it's not that complicated, but it's just an additional step. It is a totally separate guidelines for non-citizens versus the citizens of the United States.
Let me give you a scenario, Dr. Bharat, that, for instance, there was we have a parent and his son is studying in a college here, and they buy an investment property or they buy an apartment for his son who is living here. And after 3 years, he has to go back from where he came from. Now he has to sell the property which he bought it here. And now there's a capital gain. So how much money he can take it with him? How that works? Please explain.
So first of all, if it was purchased, then that entity that purchased, whether it's a foreign entity or domestic entity, and since Asians, we have very strong family ties, we usually buy it in some family's name here. And whatever that family's taxation level is, that's where they will be charged. And if it's bought under a foreign investment entity, then again, the percentage taxes, real estate gains are very same. It doesn't make any change, but it's how you file and where you report is the difference.
Okay.
Let me chime in.
Yes,
when a foreigner invests in the US and the money is now to be retracted into the home country that they came from, then a form called 1042-S has to be filed. And according to that, 28% tax has to be paid to the US. Whether they get the traction from it from their home country or not is not a concern. But if the income is US sourced, then the tax has to be paid to the US. And so if the parents bought the apartment or condominium or townhome for the son, then 3 years later they are selling it, then if the accountant knows what he's doing, then they will go ahead and file the 1042-S and then send the rest of the money back to the investor, and that is the way it will be handled. On the other hand, if the H-1B visa now gets a green card, then the parents can, in the early phase, give it as a loan and then gift him every year whatever the maximum of their countries is. And now that is not income to him, it's a gift and therefore not taxable. And ultimately he will get the whole house in his townhome in his name and without having to pay. It'll be counted as inheritance on which he doesn't have to pay taxes or gifts.
Okay, that answers the question. Rajesh bhai, aapke liye ek sawal hai. There's a question for you. The audience wants to know that how can they plan for the kids' college education? Do you have any program or do there's any plan for that for kids' college education?
Okay, when it comes to kids' college education, first of all, you need to understand about the college cost. What is college cost today? Then you need to consider education cost inflation. Normally, education cost inflation is double than general inflation. So when you consider today's cost times education inflation, you will arrive the per year tuition fee. And then depending upon where the student wants to go or parents want to send, it gives you the total need, how much money you need to have when your kids are ready to go to the college. Then you need to multiply by a number of years, maybe 3 or 4 years to complete undergraduation. So once you know that this is what we require when our kids are ready to go to the college, then it comes to where you should put money to save for the college education. And there are several vehicles. Maybe you can buy education bond, but most commonly known plan is Section 529 plan, which is most popular. What is Section 529 plan? It's a joint venture of state and investment companies. Like New York Life has a 529 plan, which is managed by principal. So what 529 plan does, it allows parents or grandparents to open an account and put monthly deposit or as and when they want to put money. That money will continue to grow on tax deferred basis. Mm-hmm. And as long as you use that money to pay education, it is tax free. Under the new tax code, you can use up to 10% of account value to meet primary and secondary education expense. That is the new thing. Now, when you take 529 plan, you can use education expenses on tax-free basis. There's another program called, which is not known very well, and it is not like used frequently. It's called Cowdell Education Savings Account, which allows to open an account by anybody for the beneficiary, that is the child, and it allows to put up to $2,000. Then you can use UTMA, UGMA account. And of course, you can use cash value life insurance, which is not linked with any government rules and regulation. It's purely your own destiny. And then you can manage it how you want to build a cash value growth and how you want to use it. So these are the basic tools available for the education planning, education funding program for the kids.
Awesome. So do you have any existing plan with your company right now? Any specific plan you have right now?
Normally we do 529 plan You can set up IRA and Roth IRA, because if you have a IRA, traditional IRA account, you can still use IRA money to pay education cost. In that situation, you will have a 10% penalty if you are under 15 and a half. If you have a Roth IRA, you can withdraw your contribution, which is after tax contribution, to pay for education expenses. And you can structure a life insurance policy, and you can withdraw a cash from the cash value of the policy to meet the education obligation. These are the planning, or these are the product we are using to develop education funding for the kids.
Okay, that answers the question. Dr. Bharat, there's a question for you. The question is that Encore has strong history of transactional performance and reference to acquisition. So what is this in layman language? What is a normal person can understand from that term?
First of all, the normal person should understand what I was talking about, my dad's advice. In Encore, for the decades people have invested money, not a single person has ever lost their principal. So that's the basis. So essentially, a normal person, if they are accredited investor, we do not have a product that people can invest if they are not accredited. That means essentially, then we have a bunch of people who can exactly explain it requires certain dollar income per year, it requires certain net worth outside of your household value of $1 million, etc. So if you're an accredited investor, then we have areas where you can invest in any project. So we usually offer projects when it's ready to be invested in. And then the investor gets their money first, then the investor gets their returns first, which usually is around 8%. And after all these things are done, then Encore makes their profit. So we are always, investor is ahead of the sponsor, and the sooner we get the money back to the investors, the Encore makes more money. So always look for, when you look for a sponsor, always look for a sponsor where both parties' intentions and assignments are aligned. The alignment is very important to do that. Now, very soon we are coming up with a Reg A Plus offering where accredited investor is not necessary, and then you can directly invest a small amount as you want, and it doesn't have to have all these criteria. But that product will be offered probably in the next 90 days.
Okay, great. Rajesh, the audience want to know that in United States, if a handwritten will, is that accepted? If it is accepted, then what are the terms and or notation that must not be missed actually for the asset, for the will to be binding? And if not binding, what would be the legal outcome?
Can you repeat the question?
Yeah, they want to know that in United States, handwritten will, is it accepted or not? That's the first question. If it is accepted, then what are the terms and notation that must not be missed, that should be a part of that will?
Most of the time, handwritten will is accepted if it is handwritten and witnessed by at least 3 signatories.
That is accepted. Okay.
There are high chance of getting challenged by the family member.
Okay. So basically, but it is legal, it is accepted, but family people can question that thing.
Yes.
Okay. How does we handle assets held overseas in case of a death of a U.S. citizen?
Well, either you can set up offshore trust for the overseas asset, or depending upon the country, and there is a treaty agreement between US and that country. Ultimately, everybody has to report that asset to United States upon their estate tax return.
Okay. So that answers the question. There's a question for Sunil Bhai and Bharat Bhai. The question is like this. It's saying that if people are getting vaccinated, everything is getting back to normal. So in this condition, some people are considering starting a business in out of state and in state. Is it a good time to do that thing? Multiple state, like to invest in multiple state environment.
So, first of all, I think in the very beginning introduction, Dr. Bharat did describe the qualities that a businessman should have. And first of all is that there should be an aptitude to learn. Then you should not start at something that you don't know, that you're going to learn about. So you should know some, at least about the head and the tail and everything that is between those two. And then your character should be pretty high. I think making money when it is the only motive, then the pit becomes bottomless. And then you start kicking people in the stomach and treading over them, and that doesn't last too long. It did for many characters like Ravan and all, it did last for a long time. But generally speaking, people catch up with what kind of a person you are, and it'll start hurting you instead of benefiting you. And so then once you make up your mind and resolve on what you want to achieve by what you want to do, then the next thing is to select the type of entity that you will want to have. And there are many ways of doing business. There is one doing business as or self-employed, where what I say to my clients is the guy in the mirror is the self, and the guy outside the mirror is the employee. So self-employed. So that self-employed person has two people in him, one who works for the guy who is going to profit from his work. And so that if you are willing to take the decisions made by your mind and follow them in your actions, then that is one kind of entity that you can have, self-employed. The second one is instead of me trying to think and do everything myself, I bring in a partner and many partners if that is possible. But even marriage is a partnership. So your wife and you are two partners that make life become successful and happy. And so then partnership is another way of that I know how to sell and he knows how to acquire. And so, or she knows how to acquire. And so then, or I know how to produce and the other guy knows how to market. So whatever partnerships that can be formed is another form of doing business. Another one is called a corporation. So there are two kinds of corporations where you can have unlimited number of shareholders and they could be from any country on earth. That is called a C corporation. It is opposite of a closed corporation. So it can be whether it is sold on the Wall Street, the shares I'm talking about, or not. A C corporation is one. It's got a bad name because they say it has double taxation. There is no double taxation. For guys like us, if the profit is 100,000 and I pay to you a salary, then the profit becomes zero after that. So there is no double taxation on that. You pay tax just like in a S corporation, which is the fourth entity type. So self-employed, partnership, C corporation, and the fourth type, the taxable type of entity is a S corporation. And there you can have limit of 100 shareholders. They all have to be US people. They cannot be from out of the country. So it was meant to. Now there are S corporations where the number of shareholders is a lot more than 100, but it sounds like
got it.
100 shareholders only when it is set up. And so that is a very fine way. Now, these are the tax types. The entity types, there are 6 of them. So there is one, again, doing business as or also known as AKA. The second one is partnership. The third one is S corporation, C corporation. And about 6, 7, 8 years ago, maybe 15 years ago, for us time is like it flies. But there is an LLC, a limited liability company.
Right.
So a limited liability company is where you are self-employed, but having the fort around you that there's a wood fence, then actually there is no fence, then wood fence, then metallic fence, and then there is a 3-foot tall wall which is 150 feet tall, so like a fortress. So the limited liability company allows a taxpayer to be separate than their business, so that if something does go wrong, then the personal assets of the person are not getting involved. So those are the tax entity types. And then there are professional associations where there are doctors involved or CPAs or attorneys, license holders. So people, engineers, they're the professionals. And so, so those are the different kind of things that you can do. Now, you talked about being in multiple states. It's whether you are from Oklahoma or Arkansas or New York or Colorado or from Japan or India or Canada or Mexico. In Texas, you are a foreign company. You're a foreign investor. So in that scenario, if you have presence in Texas, even though you are from a foreign place, and the foreign, again, Oklahoma is foreign to Texas also, then you have to register with the Secretary of State, and then you have to follow some rules of collecting Texas doesn't have state withholding, but there are 8 states that don't have state withholding. The other 42 do. And so then you have to withhold their tax rates for their cities or counties if they are involved. Then there are unemployment issues. So all these person should be able to delegate if they don't know themselves.
Got it.
So that power, if they have, then reaching the moon is very easy. You just have to make up your mind. That's all.
Well, we would like to know, Dr. Bharat, I have a question for you. I mean, our audience want to know, can we use insurance as an investment? Is that possible?
Can I first elaborate on the first question, because that question is very close to my heart.
Okay.
My answer is it.
Okay.
Can I do that?
Right.
So Sunil Bhai gave all the technical side, which is very, very important to understand.
Yes.
I have a much more fundamental psychological thought process behind it. Forget about multi-state, forget about one state, forget about anything. If you are the first-time business creator, you should never invest your hard-earned single dollar unless you have 10,000 hours in the business. So 10,000 hours, this story has been around decades, that to get better in anything, you need to have 10,000 hours of investment in it. So please, please, please do not put a single dollar in your sponsored business unless you have $10,000 at somebody else's risk. And that is such an important part of starting a business. We all have heard, I put my entire house on mortgage and then I created a $100 million company, $1 billion company. But let me tell you, these are great stories, but they are 1 in a million. So we forget that the other 999,999 people lost their houses. Nice. So that's the first important part to the person who is asking me the question, that please don't only look at the positive side. Look at what is the practical side of doing business. I'm coming to that because it's specifically mentioning about pandemic. A lot of things have happened. Listen, I got a lot of friends who bought so much PPE, the mask and this and that. I mean, a lot of them lost their shirt, because it's very difficult to find buyers for it. Right. We all understand that. And the time was there, it was okay. So now that person may ask me a question, well, I don't want to wait for 10,000 hours of education. Then what do I do? Then I said, okay, I got a solution for that too. Then you should only invest if you find somebody who has 10,000 hours of experience in it, number one. And number two, he not only has experience in hours, he has produced at least 100 times the income that you're expecting to produce. So create that guy your mentor, and whatever business you want to do, that person must certify that he would do that business. Otherwise, you're not going to do that business. So it's a different way of looking at doing a multi-state business. And I'm telling you, multi-state business is not easy. We are running businesses in about 20 states, and it has taken us decades to get there, and we are still learning every day. There are surprises that come to us every single day, especially if you're in California or Massachusetts or New York. These are the toughest states to do business.
New Jersey is the worst.
Yeah, absolutely. It's just awful. So now going to the next question that you asked me about how to use insurance as an investment. So Rajesh Bhai can probably tell a little more about that than I am, but what I would not recommend that use your insurance cash value. That's the only way I know how you would do a business using insurance money to do a business. Listen, that cash money is for a reason. And then that is to when the market goes down, you need some premium support, you need that, you need cash for your living. When you pass away, that cash would help, all those reasons. So if I understood the question right, my recommendation is go back to rule number 1, which is what I just started. First get 10,000 hours of experience before you start a business. And then you can ask Rajesh Bhai if he has any suggestions, but that would be my suggestion.
Rajesh Bhai, do you want to add more to that?
Yeah, I agree with Dr. Bharat Sanghani. First of all, you should try to avoid using insurance money to start up the business. However, you can, because that's how the Disney World started. That's how the JCPenney business was started. They all used life insurance cash value borrowed and started the business. When it comes to the real estate, if your policy structure heavily funded for short period of time, and after 7-8 years you are sitting on tremendous cash value, then you can use those cash value for the business purpose or buying real estate. But if your life insurance is purely for yourself and your family need, try to keep that cash value as last resources to start with the business. That's what I would add with Dr. Sanghani's comment.
Thank you. We have a question coming from, we have 10 more minutes to go to wrap up this session. But before that, we have this question coming from Mr. Chandra K. Bhandar. Again, he's asking me this question, and the question is insurance related question for Rameshji. They're asking the best stage to start life insurance. When is the best stage to start the life insurance? And can we suggest our children when they just start their job and start investing areas for retirements? Is it a good idea or not? So the question is that what is the best time to start a life insurance?
In general, as soon as you start making money, you should start life insurance to protect your human capital, as I explained earlier. And if you are parents or grandparents, you want to offer some financial security, your best gift, you should buy life insurance policy on your kids and grandkids when they are young. Many of our clients buy life insurance when on the just born baby at 0, within a month or so. So the advantage is the premium will be low, and when they really need equity, it's already there in the form of life insurance. Now, one simple principle is sooner you start, better you will be in long run. With the permanent life insurance policy, cash value life insurance policy, it helps to build retirement. It can also help you to achieve some tax diversifications. It can also help you to create a tax-free retirement income stream. And it can also help to have flexibility when it comes to the retirement, because if you have life insurance as a backup, you are not purely relying on the market or your portfolio for the income stream. And during the year when the market is down and portfolio is negative, life insurance can support for the income stream. So in general, sooner you start, you will be better. And buying life insurance at very young age will make you like premium less expensive, more affordable. You can buy more coverage.
Thank you.
The way I explain, Justin, to my clients, and I don't sell life insurance, and I only recommend people's names from whom to buy sometimes.
Yes.
But the thing with life insurance is you can buy it only if you can. So if you fall down 5 minutes from now, you will not be eligible. So you have only 5 minutes from now to buy it.
Okay.
And so if you buy it now, then you are covered, and you are able to do for your dependents and your spouse and the things that they should have a standard of living with or without you. That is the purpose of having life insurance, and whether it is later. If you can cash it out before when you are retired, that is fine. If you can live, or if you can give to charity at the time of your death, that is also wonderful. And your beneficiaries should have that, or should be able to pay off the loans, so that the property that you have will become totally free of any debt, and they can have some of the real estate is lost at death by the beneficiaries because they cannot continue to make the payments that the parents were making. So it is wondrous to utilize life insurance for that purposes. So this is how I talk to my clients.
Perfect.
We can probably add a businessman's perspective to life insurance. Do we have time to do that? Otherwise, I don't need to talk.
We have 3 minutes more to go, actually.
Okay, and then I will probably finish in less than that. But as a businessman, and this is a perspective, okay, again, throw it in the garbage if you don't like what I'm just going to say. But as a businessman, I said, what am I doing here? And so I'm giving money. So I make money if I die. And if I don't make money, that money is worthless. So either way I'm losing, right? If I have to die to make money, and otherwise losing the money. So I said, for businessmen, this doesn't make sense. But life is a very good vehicle. So I came up with this thoughts. It's not my original idea, so I'm not going to take any credit for this. But we structured so many life insurances in my company, myself and other people. And Rajesh Bhai and I see a few other people who are doing life insurance business here. They would be more than glad to help you. So we reverse this situation of losing either way, dying or living and then losing the premium. So there is something called a cash comeback policy. So what we have come up with is whatever premium we pay, we structure it such a way that at certain age, if you're alive, then you get the money back with some interest. So we converted now to a perfect pure investment. The returns are relatively less and smaller, but they are tax-free. And if you die, you got a windfall. So if you're alive, you get the money back with return. And if you die, you get a windfall. So that's my thought of looking at.
That's another reason to buy life insurance.
Exactly.
I think you must make sure that your dependents don't have to suffer if they lose you.
And Rajesh bhai, you can send me the commission check later, okay?
Yeah.
Zindagi ke saath bhi aur zindagi ke baad bhi.
That's right.
Thank you, guys. Thanks a lot. We are going to take a small break, a commercial break here. And after that, our secretary, Dinesh Huda, will take over and give a word of thanks. This is a time for commercial break.
Thank you, Justin, and all the panelists, and thanks everyone for attending. Thanks to our panelists, Mr. Rajesh Sanchala, Mr. Dr. Bharat Sangani, Mr. Sunil Mani, who delivered great information related to taxation and financial wellness, and time they spared today away from their busy schedule over the weekend and away from your family for the community. Very much appreciated. And thank you to Mr. Justin Vargas, who did a great job in moderating this important topic today. It's more important than ever now during this pandemic, and we would like to thank all our sponsors who stood by the institution of IANT and believed in what we do for the community by supporting us and continue to support in these challenging times. We would like to thank our various sponsors: corporate sponsor Heritage Land Bank, Discount Power, New York Life Insurance Company, University of Dallas, our gold sponsors Paul and Geetha Pandian, our silver sponsors Sunil Mani, CPAPC, Encore Enterprises, Southwest Colon and Rectal Clinic, our supporting sponsors Aluwalia Law Office, PC, Skypass Travel, and last not the least, our radio partner Radio Caravan and community partner North Texas Food Bank. Today's event is live streamed by our streaming partner Mahamaza. Without support of whole team at Mahamaza, we would not have been able to bring this webinar to you today. So once again, a big thank you to all panelists for today's webinar, IANT board, trustees, and a special thanks to our sponsors. Without these sponsors, our activities would not have been possible. Thank you everyone, and this adjourns today's webinar. See you soon again. Thank you.